Good afternoon, everyone, and welcome. My name is Wei, founder and lead analyst at Homodeus Research. Thank you for joining today. Today, I'm delighted to be joined by Rael Ross, founder, executive director, and CEO of Butn. Butn's ticker is BTN. It's got a market cap of about $5 million. Now, Rael founded Butn with a vision of transforming the way Australian businesses access working capital by combining technology with embedded finance. A qualified accountant with more than 15 years experience in financial services and technology, he has led Butn from startup through to becoming an ASX listed fintech that has now funded more than $2.5 billion to Australian businesses. For me, three key reasons why I think Butn is worth watching. Firstly, it operates in the large and growing SME finance market. Cash flow remains one of the biggest challenges for SMEs, and Butn's technology-enabled foundation platform helps businesses unlock working capital quickly. Secondly, the company is increasingly focused on embedded finance. Rather than simply providing finance directly to customers, Butn is integrating its finance solutions into software platforms, marketplaces, and business ecosystems. And thirdly, Butn continues to evolve beyond traditional invoice finance into a broader fintech platform, with products spanning transaction funding, accounts receivable solutions, and embedded payment offerings. With that, it's my pleasure to hand over to Rael.
Thank you so much, Wei, and thank you everyone for joining this afternoon. I will quickly share my screen. I think we'll run through an information pack updated as at August 26th. Obviously, the end of the financial year was just behind us, and we'll be putting out our results soon. But we'll fill you in on everything to date, and then we'll take some Q&As, and let's see how we go. So let me share my screen here. Take it we can all see it.
Yep, it's up.
All right, perfect. All right, thank you all again for joining. Here we are, Butn Limited. For those of you that don't know me or haven't met me before around the traps, my name is Rael Ross. I'm CEO, founder, and executive director of Butn Limited. We started the company back in 2015, listed it in July of 2021, and continued to perform as we have. All right, we'll go through a quick agenda at the moment. We'll do an executive summary. We'll go into a little bit of business overview. We'll touch on some of our customers and how we're seeing them perform, some of the strategy and the growth going forward, some of the highlights and the capital positions we find ourselves in, and finish up with a bit of an outlook and then some questions and Q&As. Let's hit it off with the executive summary. All right, so again, for those of you that are familiar or unfamiliar, I'll give you a bit of a refresher. Butn's been around since 2015. We've funded well over $2.5 billion, coming on $3 billion of lending over the last couple of years. We have a particular model where we combine technology, partnerships, and lending into a one-stop shop for all things B2B funding. We have a growing invoice trade and finance market as well. And one of the differentiators for us is that we really do integrate, and that is our whole sort of go-to-market strategy through strategic partnerships, one of which is MYOB. And as well, you might have seen, if you're not new to the store, we have very tightly controlled register, which is controlled by founder, long-term investors such as Regal, and strategic partner and investor MYOB. Bit of an overview, as you can see, the KGARs are all up consistently since 2022, just after the year we listed. Originations up nearly 20%, revenue up 40%, and EBITDA is hitting 76% KGAR, and that's on an annualized basis for the FY26, based on the last numbers that we put out earlier this year. Some key investment highlights, again, for those of you that are new to the story, we are a proven B2B funder, whether we like to call ourselves the largest transactional funder in Australia. Our whole business runs on fixed fee per transaction. So while we will give customers and we will give clients a particular, call it line of credit, everything is fixed fee per transaction on those transactions. We have a unique business model, again, where we incorporate technology, data, and strategic partnerships. Again, MYOB is our mainstay in our go-to-market, which is, again, why we listed off the back of 2021 with the industry first proposition. Leading credit risk management, industry low write-offs, which we'll get to later on. Significantly increasing, again, our debt availability to seize those opportunities, which we'll touch on as well, our Northleaf facility in the non-bank lending space from overseas, which gives us $100 million of firepower plus, and again, our scalable platform and distribution. So let's get right into it now that we have a little bit of an overview. Here we go. All right. Butn's capabilities. We're really focused on 4 key areas of differentiation within the Butn platform. Transactional funding, strategic partnerships, again, tech-enabled, and the business model that we fund through. So transactional funding, we touched on before. We are fixed fee per transaction, no minimum volumes, no other fees. Just like when you go into a shop and you tap your credit card and you charge a fixed fee, well, not anymore, but you used to be charged a fixed fee. Here we are as well. Again, with a fixed fee on that transaction, we make our money by how fast that transaction turns, whether it's 30, 60, 90 days, 14 days, whatever the debtor's paying us back. This obviously gives us the ability to run the book with low losses, high amount of volume, high amount of fast-turning receivables, and being paid back by some large corporates and rated corporates, etc. Strategic partnerships, we don't have any BDMs, we don't have any sales staff. Our whole business runs through our direct partnerships. We have direct as well, inbound opportunities as well, but mainly our sales team is through our direct strategic partnerships like MYOB. This gives us low cost of acquisition, mass origination, mass distribution, and a huge competitive moat as an exclusive finance provider to the platforms and CRM systems and marketplaces that we plug into. Tech-enabled, we built our proprietary fintech solution over the last 6 years. We believe we're still best in market. We're winning clients, we're winning partnerships day in, day out. We've fully digitized an automated process where you can click a button, register in under 10 minutes and be funded right off the back of that once-off 10-minute registration. So it really is a first-to-market opportunity. It was in 2021 when we launched, and it still is a first-to-market opportunity. We've built to integrate into third parties, and this, again, we live in the point of transaction of those platforms. So where a client, where a party transacts, that's where you'll find the Butn. And that's why we're winning those clients on that point. Again, ease and speed of transaction. And again, we get the data from that third party, from the independent third party. We get access to that data. We pull that data. We machinate that data, we make a decision instantly, and then we send back the money. So that's how, again, our credit losses today are considerably low and probably the envy of many in the market as well. The last cornerstone of the business is our efficient business model. So that's, again, fast growth, industry low losses, and again, really taking hold of that operating leverage through that technology platform and the lean cost base that we have. Just touching on sort of the solution that we've built over the years, it really is Butn, as we say, funding at the click of a button, which is how Butn came about. We have an average fee of between 2 and 5% fixed fee on that transaction, and on average that transaction would turn, again, 14, 30, 60 days. On average, the book turns, as we'll see later, about 6 times a year, but that provides us, again, that volume, and every time somebody clicks that button, we get access to that transaction, fund that transaction, and make our clip of the ticket along the way. We plug into CRMs, marketplaces, business aggregators, again, we'll see later on. Benefits for Butn, mass distribution, mass origination, low cost of acquisition that we've touched on. Benefit for platform partners. Our platform partners are keeping their users within that ecosystem. So they're not going on Google, they're not calling their bank, they're not calling their brokers. What they're doing is clicking that button at the point of transaction on the existing ecosystem where those clients are living. So they don't need to leave that ecosystem, which is a huge benefit for our platform partners, including MYOB. And again, obviously the benefits for the SMEs is they don't have to do any work. They're clicking a button, we have access to the data, and we send back the money based on the credit decision that we do at that point in time. And they have instant access to cash flow and working capital, again, which is a game changer for them. Proven partnership model. Again, we established in 2021. We have over 20 platform partners. our debtors and our clients have been on the platform. A lot of us have been since the beginning. We have thousands of clients that are clicking the button at any point in time. Our average margin sits at about 3%. So again, 3% turning 45 days, 60 days, 30 days. That's how we're getting. That's how we're getting that volume, and that's how we're getting the turn. Quick case study, MYOB. You can see the growth that's come across that 289% CAGR over the last couple of years. It's a multi-year agreement. We're hard-coded. We're embedded in that MYOB platform. And again, funding at the click of a button. We don't need a whole team of hundreds to run that business. It's just run literally with a handful of internals to be able to, again, originate and really capture that engaged user base, which is, again, first to market opportunity within an accounting platform. Some of our digital ecosystem that we've touched on. So fully automated, built-in Salesforce, which is, bank grade security, which allows us, again, to access that data in real time. We have interfaces. We sit across platform services and analytics. We plug into all the major third-party platforms like Ilion, Green ID, HelloSign, GoCarlist, Twilio, SendGrid. So this gives us a full suite of products to be able to make those decisions in real time and send back the money in real time. These are deep integrations with platform partners. These are not referrals. So like MYOB, we are hard-coded in that system and embedded within that platform to enable instant access to that finance. We have, again, smooth customer experience as well, operating efficiency. We've touched on data-rich analysis. So we get with our APIs plugged into those third-party platforms to get full access to that rich data at any point in time as well. So you can be going to a pub on a Friday afternoon after work close. You click the button and you have the money in your account. If you want to you want to call your bank, you want to call the broker, you want to get money from somewhere else and you need a loan, where you're going to get it on Friday afternoon. But with the click of a button, excuse the pun, BUTN, you can actually have instant access to that sort of finance. We'll touch on quickly risk management and sort of our losses that we've spoken about before. You can see in the graph on the right-hand side, we sit across with the big four banks. Really, we believe the envy of our peers. Cumulative write-offs over the last couple of years since inception, less than 1%. We're sitting at about 0.5 to 0.7%. So really negligible losses across the business, over $3 billion of funding to date. We go through a plethora of onboarding instantly with the click of a button, KYC, AML, credit checks. Again, we're funding debtors as well through our debtor finance program. So we have two lines of defense. Our first line of defense being the company, and second line of defense being the debtor, or reverse it depending on which way you look at it. But the debtor's paying us back first. And if the debtor, like a Coles, Woolies, Audi, Costco, Metcash, one of those companies don't pay us back, second line of defense then becomes the company. So we really do get that double layer of security. We also have a retention of up to 15% as well for any buffer or rebates, etc., that the clients are selling to their counterparties. We've run full background check, security recourse, many cases property backed as well. So we really are heavily secured, and we're doing sort of deep dives and deep credit checks on the businesses, on the debtors, on the customers, on the directors, etc. And that again all leads to our cumulative low write-offs over the last couple of years. Let's now touch on some of the customer overviews and give you a bit of a flavour. So earlier this calendar year, or probably before, I think we launched with Jim's Group, obviously the largest privately owned franchise in the country, offload transport marketplace, load shift transport marketplace. So we have majority of the transport marketplace runs off the back of Butn funding. MYOB, again, which is our North Star, how we started this business, and again in real estate, select pay, food. So we are really sort of pushing forward in that. You can see again on the right hand side of the screen how when we started the platform originations and how they're grown now, circa sitting around 50% plus of the business. Again, through the click of a button, no BDMs, sales staff, etc., all inbound through our platform integrations, getting that huge availability of scalability for our embedded opportunities. We have internal distribution networks as well. We have referrals through our nurture journeys and marketing initiatives, but especially really, you place a button on a platform with 1 million users. That is really the the bee's knees, as we like to call it. We don't need to stand at a broker conference by a table and wait for people to come up to us. We have a button on a system that attacks 1 million users within that platform, and that's really the game-changing position that we've taken. Some of the sort of numbers that sit around our platform, again, we're really leaning into that platform business that we sort of built when we went to IPO. You can see the CAGR again off the originations up nearly 50%. We have fast turning receivables, average fee 2 to 5%, turns approximately 6 years. So we can get anywhere between a 15 to 36% return on every click of that button. And that's really where we get our access to that scale and that growth. Our improving revenue margin back in the day was sitting around 2%. Now we're sitting at 3%. It's the convenience of clicking a button at any point in time on the existing ecosystem where the client lives. And for that luxury, they're not shopping around. They're not calling anyone else. They're clicking a button and they're happy to pay that 2.9 to 3% sort of numbers. And again, we have a declining average invoice size. Now you might say, well, that's no good. It's exactly the opposite. It's actually great. We have a declining invoice size, which means we get smaller invoices, more scale, more diversity, and lower bad debts and customer defaults, because it's an average transaction size that sits today around $3,000 to $5,000. That turns on average about 60 days. So it really does, within 60 days, you know whether that particular loan has gone bad or not. And you can make a quick decisioning as well, as opposed to, say, setting up a loan at day one and waiting for a year for that loan to run off, whereas ours will run off on average in 60 days. Bit of a book profile to whet your appetite. If you look across our database, majority is large corporates, Coles, Woolies, Aldi, Costco, Metcash, household names. Again, we've got a fast turning book, which again allows us to have those low loss ratios and to have that diversification. Industry exposure as well. We sit across supply chain, trade, building, again for insurance, and again, some of our top 10 customers really have a nice spread there. So we're really not tied into any particular way, shape, or form. We're a generalist trade and invoice financing company, and again, through those integrations, allows us to have pure diversification. Going forward on a bit of our strategy and our growth, and again, I'm trying to plow through it so we have enough time at the end. Part one, what are we sort of looking at now for growth on a go-forward position? Organic and inorganic opportunities. So organically, increased penetration of the existing multi-channel distribution strategies that we currently sit with today. So going deeper into MYOB, going deeper into offload, offering existing products and services within that deep network, and continuing to improve that product. We have a strong pipeline as well, potential new strategic partners coming on, and you'll see that over the next 3 to 6 months, and access to funding. So now that we've got the Northleaf facility up of 100 million, it gives us, again, huge access to huge product lines that we can now fund with those different non-bank lending credit lines. Some of the untapped opportunities as well, cross-selling. So again, multi-product against multi-strategic platform partners that we're integrating with as well. International expansion. Some of our platform partners also have brother and sister companies overseas. So we've already done the APIs, we've already done the tech integrations locally, so much so that now we can take those APIs and those integrations and integrate them in overseas. So that's something we're looking at as well. And inorganic opportunities. So we believe this is a very highly fragmented market. Butn's tech platform provides significant advantage over the other players, and again, the improved margins. So if you're competing on a direct client and you might be able to get away with 1.5%, maybe 2%, the luxury of clicking a button, having instant access to finance, you can then charge a margin of circa 3%. So you really do get those economies. And going forward, some of the growth enablers that we're looking at, technology. So we started developing this back in 2019, 2020. We IPO'd with the integration with MYOB back in 2021. That technology has continued to evolve over the last 5 to 6 years, and we continue to win business and clients off that technology that we have increased, that we've evolved, and that we've really streamlined and become a lot better at. Service excellent. Look, we're we're technology first, but service definitely is alongside our technology. We're very close to our industry partners. We're very close to our platforms. We work together again because we're embedded and not a simple referral system and a simple referral process. Once you're embedded and you're really hard coded along the board, in every single line of code, you really need that sort of service on the platform side and on the client side as well. And system and processes, again, what we've touched on, which is why we believe we have those industry low losses. Now, we know there's been a little bit of chatter out there around the global bank that we've done a deal with. So we're happy to update that is still on track and on time. We're very excited. It's a first to market opportunity. It's an international global bank. We've signed the MOU. We're deep into the long form agreements now. Again, because it is a first to market, the agreements are taking some time. But again, we believe that this is a huge opportunity that will yield unbelievable results for Butn. It's a buyer-led capital light supply chain finance program to be launched in Australia, and we hope to launch it in this year, calendar year 2026. Button's taken the view to heavily lean in to that capital light model, focus on our core, focus on the technology that we've spent years developing, and now we're starting to really reap the rewards and the benefits of that. So much so that we've also recently launched our private retail credit fund called Moneybox, of which we now have the trademark for the word Moneybox as well. So we're very excited about that. We think that's a huge win in itself. Minimum $5,000 investment, minimum 1 year lock-in, quarterly distributions, quarterly redemptions. We're giving solid targeted returns at BBS 3, and our current IRR internal is 14.5. So we have a really solid NIM of over 7% on those deployed funds. And again, we see this Moneybox as a huge driver in the business going forward. A bit of a color around Moneybox, why we think this is really the bee's knees and why we think this is a huge go forward position for Butn. We engineered funding at the click of a button originally, sort of circa 6-7 years ago, through one of the first with embedded finance, especially the first embedded finance for B2B. We know that for a fact. Then when we had the idea of Moneybox, we realized that we can redesign and re-engineer funding at the click of a button for investing at the click of a button. We have these large distribution models. We have these large distribution partners through these third-party platforms, and we believe that we can then take and lead on the same APIs and the same distribution platform to be able to now allow those end users and those customers not only to click a button for funding, but now they can also click a button for investing. It's a fully digital onboarding. It's fully digital redemptions, fully digital investing. So it really is, again, another first to market to be able to really leverage off those distribution networks. And that's something we're working on currently alongside the top 40 global bank deal. So you can see Butn is now pivoting very strongly, leaning in heavily into our technology that we've developed, that we've built, really leaning into less of a traditional lender and really focusing on that digital experience. And again, touching on it, we have other JV opportunities again off the back of these two deals, off the back of Moneybox and off the back of our lending through asset finance, property finance, etc. So again, money becomes a feeder fund for us, and that money captured in Moneybox can then go out and fund all our other opportunities. So we're again highly bullish on that and very excited about that opportunity as well. Some of the key metrics, just as an FYI, for those that might not have been following the story to date, 2.5 billion, closer to 3 billion today of lending to date. Cumulative write-offs, less than 0.7%, I should say. So really great numbers there over the last cumulative over the last couple of years. Book size sits around 90 million today. Gross margin sits about 3%. So that's every time someone clicks a button, the average margin across that board is about 3%, and the faster we turn it, the more money we make. Gross yield sits anywhere between 15 and 30, so really a nice spread there, and the average book turn is approximately 60 days again. So again, fast turning, high yielding, highly diversified books, so very strong numbers sitting there. Some metrics, last time we put out our numbers was Q3 26, some of the things that happened since beyond then. Operating cash expenses were down on Q2, 11% continued to trending down, including the repayment of the Mighty Partners corporate bond. So that saved us well over $1 million of interest. So we're very, again, strong and bullish on the opportunity that now we've retired that corporate debt. That goes straight to the bottom line. We have a $100 million, again, Northleaf facility. We've drawn 77 against it. So we've definitely got some headroom there. Our cash and short-term investments sitting at back in March was 14. And on top of that, we've recently announced the sale of our non-core asset, which was the panel book, for approximately 4.1 million. And that was completed in June, and the considerations in the end of July. So we're past that point. It was a strategic play for us. The price was good, and that again helped us to again repay that Mighty Partners debt, save that interest, and continue on our part to profitability, and again on our path to cash flow positivity. And again, just touching on the platform originations, up 60% on the prior comparative period back in Q3 of 26, a couple of months ago. And we'll be putting out our numbers for the end of the year in the next couple of weeks, and you'll be able to see those numbers trending as well. So very good position. Cash on hand, short-term investments, and we continue to perform there. Bit of an outlook on a go-forward position. Look, we're still seeing good inflows. We're seeing good business opportunities as well. We know 92% of SMEs have experienced negative cash flow at least once, so we know the market's there to be taken. 47% have failed to inadequate financing. We can solve those problems now. There's no risk of inadequate financing because we can assist with that. And again, the invoice penetration in Australia is lagging hugely against some of the peers overseas, so only 4.8%. So great opportunity and great upside. Again, we've got the distribution to be able to attack that. We've got the funding to attack that. We've got the technology to attack that. And those three key areas that will allow us to continue to support and win this game. A bit of a snapshot over the last couple of years where we've come. Founded, as we said, 2015. We purchased a number of books along the way. 2019, 2020 is when we really kicked off Butn, got it going. MYOB, we listed back in 2021. We've got some huge partnerships like Freelancer, Food by Us. And then if we fast forward now, we're leaning again heavily into the franchise area. We think that's an untapped market, and we've done a deal with gyms and FFco, aged care, so we're strong in that position. The retail fund called Moneybox and the Top 40 Global Bank is our next two revenue drivers that we're extremely excited about, and hope to see some yields off the back of that. One of the best looking boards on the ASX, myself, founder, CEO, executive director, our chairman, non-exec director, Cameron, who comes with a plethora of knowledge, and ex-actuary, so he's our numbers guy, and Stan, who's leads Australia's largest one of the quick service franchises. So again, we are leading heavily into that franchise sector. We believe that's an untapped market, and there's no one better on our board to be able to assist with that and really grow those distribution networks than Mr. Gordon himself. That brings me to the end of the presentation. I've tried to smash it out in 28 minutes to the dot. So hopefully you, whoever's sort of joined us today, has got a bit of a flavour and a bit of an understanding of what we do here at Butn and sort of where we're going and the growth that we think can be achieved through the Top 40 Global Bank, through the existing business, through those distribution networks, and especially through Moneybox, our private retail credit fund. Again, fully digitally distributed through our networks, first to market opportunities. So something we're extremely excited about that. Again, freeing up the Mighty Partners corporate debt, bringing down that interest, taking back some of those short-term investments, redeploying that money as well into high-yielding opportunities. So it really is a perfect storm as we go into the second half of 26 and into 27, where we can continue our march towards cash flow positivity, profitability, and cutting down those operating expenses that we can again continue to perform as we have been in the last couple of months.
Excellent. Thanks, Rael. Very comprehensive presentation. We've got a lot of questions which have actually come through during which, so we might just try and smash through some of these. The first
Sure,
few are related to, I guess, just the competition landscape. And so, what differentiates Butn, say, from factoring firms? And there's another one which has come through regarding yourself versus some of the maybe BNPL platforms out there, such as PayPal and Zip. So, if you can give us a bit of background on
sure.
that, thanks.
Yeah, sure. So look, we're still winning the game every day of the week in B2B transactional funding. There's no one out there that does the B2B transactional funding, especially not with the digital distribution that we have. We've tried to do the numbers many times. We believe the Butn can hit up to 1 to 2 million SMEs across Australia and New Zealand. So that's a huge, huge number. Again, if we needed to stand at a broker stand at a broker day, and maybe two or three people would come past the table, and maybe two or three people would leave a business card, and then we'd follow up, and then we'd go back to the office. Maybe we'd get one or two, maybe leads a week. I put a button on a system with 1 million users. I think it speaks for itself. There's
Mm.
no broker stands. There's no head count to stand at the stands. Flights up and down the east coast trying to attend all these events, etc. So our Butn really is that major position. When we talk about there's some of the others out there like Zip again, Zip buy now pay later, um, B2C or consumer based. We're only B2B. We don't want to play in the consumer space. There's plenty of players out there that are doing it. We've really stuck to our knitting. What we've said previously as well. One of the things we've done is we've really heavily leaned in now to the technology. We've exited the position of the non-core panel business. We got a great number for it, 4.1 million, straight down to pay back the Mighty Partners debt. It allows us again to save well over $1 million straight to the bottom line in that March to profitability. So when we think about the competitive landscape, does someone have the distribution like we have? Not really. Does someone have the technology and the nous? Maybe we'll catch up with AI, but we've already been in this space for 5, 6 years. We're a known brand. We have full incoming calls. We have incoming platforms, partnerships. If we are ever in a scenario where we do a go up against another platform, we'll win at the end of the day. You can see what we've done with MYOB, fully integrated at the touch of a button. Still, 6 years later, it still hasn't been done before. We know Xero tried it with one of their guys and it failed miserably. And obviously, you can see where Xero's share price is today as well. So shout out to Xero. So again, like we know where we are, we know where we stand, we know where our products lie, and that's really what we're good at, and that's what we're leaning into.
Yeah, no, that makes a lot of sense. So just in terms of like these partnerships that you formed, like MYOB, you mentioned that it's hard coded. How did these partnerships form, and what are the economics between yourselves and your partners?
Sure. So what we like to call it is a hosting fee. So we pay out a hosting fee to the platforms for the luxury of hosting Butn within those ecosystems. But it's a twofold attack when you think about it, because some of these ecosystems, like Freelancer that has 40 million freelancers worldwide, like the Gyms Group that has 5,500 franchises across Australia, and each of those franchises have other franchises underneath. So it really is that sort of multi-level model where you can attack each level with the Butn with a different product, whether it's trade finance, debtor finance, or any of our other products that sort of sit within those things. And I think one of the things you touched on as well, Wee, was that how did these partnerships come about? Well, the fact now that back in the day in 2021, you're right, we were out there, we were cold calling, we were selling, we are saying, listen, we've got this embedded finance product. The question was always, what's embedded finance? How does that work? I'm like, well, you've got users on your platform, they need money, allow them to click a button and get instant access to cash. And once that light bulb went on and clicked, they're like, great, how can we get it? How can we get it integrated? And then secondly was always like, well, if you integrate us, actually, we're going to give you a clip of the ticket and you got to push it to your users and you got to advertise it. So it really is sort of some of that inbound inquiries that are coming in, and you can see again like the bank that came to us to sort of run this program for them. The technology still stacks up 6 years later. Again, many iterations down the track, but that technology is robust as can be, and that again built on the rails of Salesforce with bank grade security allows us to really capture those huge opportunities.
Excellent. Just on the fee side, you mentioned an average fee of between 2 to 5%. What determines the amount of the fee? Is it just how quickly that the the customer pay you back, or are there any factors?
Exactly right. Time value of money.
Yeah.
So I think interesting this whole industry, whether you're in invoice trade, lending, any position where money in and money out, it's all about time value of money. If you need to pay wages today and you don't have the money to pay, there's a cost to waiting for that money. Either you're not going to pay your wages or you're happy to pay a percentage away for that cost. So we charge between 2 and 5%. Any point in time at any click of a button, depending on the time value of money. Are we getting our money back in 7 days, 14 days, 30 days, 60 days? And that will determine the time value of money. If we get the money in earlier, happy days, we make more money because we can then recycle that money and use more money to go out the door. If it comes a bit longer, we won't lose money. We might make a little bit less money, but we'll know exactly when that money's coming in. We'll charge for that. And again, if we're not paid on that date, we'll always charge them extra fees. So if the money's out the door, it's the clock is ticking.
Right. And you mentioned before the average fee is about 3%, book turnover about 6 times a year. So, simple maths, we can kind of like say 3 times 6, that gives us about like an 18% return on kind of like the funding. Is that
Correct? Yeah. Look, high level, like that's the fixed cost on I guess the click of the button or the fixed cost for that transaction. But again,
right?
if you're clicking that button and you're
Yeah.
getting charged 3% and that money's coming in 30 days, you're in a much better position than when clicking that button is coming in 60 days. So that's why we say it's on average, but there are some products that are turning 3% for 30 days, which is again pushes up our margin, pushes up our yield, pushes up our IRR, and then we can again put out that money again and turn it a lot faster. But again, we can't look at the whole book. We have thousands of clients, and we do hundreds upon hundreds of thousands of transactions at any point in time that are open. So we just take an average yield across the book, and we say, look, it's around 3%. It's around 60 days, but some turn a lot faster with a lot higher multiples.
Got it. Got it. There's a few questions which have come through on capital requirements and I guess funding requirements. So can you give us a bit of color around that? How are you funding?
Yep.
Is it fixed or floating? And just,
Sure. Yep. So look, we have a line from Northleaf, which is a US and Canadian based non-bank lender. They're a private credit fund over there. They're extremely supportive partners of ours. We've been with them over a year. We refinanced out our corporate bonds. So we'd had many hundreds of millions of corporate bonds over the years. That's how we always sort of set up the business. Some of these larger partnerships started coming to us. We needed, again, that accordion ability and that flexibility in the funding lines. Our funding today is a BBS 6. So it's not the cheapest out there, but it's definitely not the most expensive than we were with the bonds. But it does give us that flexibility to be able to really execute on the plans that we have and those distributions that we have. From a capital point of view, again, we've paid back the Mighty Partners corporate debt, saving ourselves over $1 million a year. We sold the non-core business. We actually still continue to fund that non-core business at a BBS 8.5 position. So we are making a solid NIM on that book that we know that we did love. I mean, that was our genesis of the business back in the day, panel shop factoring. So we do like that book. We like that security. It's all insurance company debt, so the losses are negligible there as well. And again, that gives us a little bit of NIM and enable us to put out the door. And the team that was with that business actually went to the company that bought the business off us as well. So our head count reduced, again, saving us more overheads and straight to the bottom line cash. So we're definitely in a good position going forward. We have the funding to be able to grow and the capital requirements and the support from our funding partners to be able to execute that as well.
got it. A few questions here on the customer profile. So how sticky are your customers? Any metrics around retention rate or repeat customer business that you can provide?
Yeah. So interestingly enough, debtor and trade finance by its nature is a very sticky industry because once you're in the flow, you're in the payment flow of these particular parties. It's very hard for them to exit actually the position. So it's a good thing and a bad thing. The bad thing is that eventually they will try to refinance you out. Good thing is they'll be with you for 5 years plus. So the average tenor of our book sits around 5 years plus. Sticky clients. I mean, again, we're not the cheapest in the world. We're definitely not the most expensive, but we go above and beyond. We give the service where it's needed. And again, if you're clicking a button at your point of transaction, you're paying for that convenience, and that convenience alone wins the game every time. So again, we have thousands of clients. Our churn rate is really minimal. And that's something we've seen again, even over the last 10 years, even before the Butn was actually established. So,
Mm. And then on the flip side, just in terms of potential new customers, do you have a proportion that you reject?
sure. Look, our acceptance rates are actually considerably high, and that's only because of the deep integrations that we have with the platform partners. So if you're clicking a button, we have access to all your data. And they share their data, obviously, with us. Once they share that data, we can make a very quick decision, and we know yay or nay. We know whether we want to fund these guys or not. And I think that's the beauty of it. Whereas some of the other incumbents might take 2, 3, 4, 5, even 3 months to be able to do a deal, we can literally do a deal in under 10 minutes, and we do every day of the week. So people are paying for that speed, and they're happy to pay for that speed. And the plethora of data that we get off the click of that button really allows us to, I guess, access data that no one else has at that click of a button. And it again allows us also to really capture, I think, not only the data, but the client as well. So if they can click the button and we get access to the data, within 10 minutes, they can be funded. And once they're funded within 10 minutes, they realize that there's no need for them to go anywhere else.
Right. One more question on security, which is
Sure.
what's in place for cybersecurity?
Sure. So again, we're obviously heavily cyber focused. You look at some of our integrations, we're dealing with financial data. We're built on Salesforce Rails. I mean, I think you can sort of go back to Google. We were one of the first. They did a case study on us, so much so back in 2021 when we were the first to build a LMS and a loan management system on the Salesforce Rails to enable again those integrations and those users to be able to access our data and those platforms to access our data and vice versa, again, because we're so hard coded and sitting around those APIs. We have the regular insurances that cyber would. We have a team here, we have a team offshore. So we are, again, we take our cyber extremely seriously, especially in this day and age. And again, the products we built and the integrations that we do is obviously a very secure platform, again, because we're dealing with other people's data.
Excellent. A couple more questions, and we'll probably have to wrap it up on time.
Sure.
The first one is just related to the strategy going forward. So in terms of international opportunities, which markets are you in now and which ones are you looking at? And then secondly, in terms of inorganic opportunities, what sort of risk are you willing to take when acquiring?
Sure. Look, I think the risk question is always the $1 million question, excuse the pun. There's two ways of thinking of it. And we've had this conversation, internal, external, investors, shareholders, we always get the same question. You're either not making it, you're not taking too much, you're not taking enough risk, or you're taking too little risk. And then the higher, I mean, it's a standard in lending. The higher up the risk curve, you might lose more, but you might make more. Or you're lower down the risk curve, you might not make as much, but you're not lose as much. So that risk question is always sort of has to be a real balance between number one, dollars and cents and risk profile and funding, etc. From a risk point of view, we like to stick to our knitting. We know we've got the technology that nobody else has. We know we've got distribution that nobody has. We know we have certain integrations that nobody has. So we want to lean on those integrations. We want to lean on that and find complementary M&A opportunities that might fit into those existing buckets. So that's sort of from an inorganic point of view. From an overseas point of view, again, a lot of our customers and a lot of our integrations here have sister companies overseas. Freelancer, obviously one of them. They have escrow.com that sits overseas, and a couple others. Offload as well. Transport marketplace. You can just look around the world at some of the other platforms. Some run the same technology, some don't. But again, our APIs are agnostic APIs. We built them for agnostic APIs. We can plug and play. What used to take us sort of 3 to 6 months to integrate, now we can do in 2 to 3 weeks, literally. So we've definitely come a long way, and those are, again, some of the opportunities that we're looking at. We set up a New Zealand factoring company back in the day. That's still active. It's not a big part of our business. New Zealand is a smaller market. We've seen, obviously, recently with Zip exiting the New Zealand market as well. So we understand there are sort of complexities in New Zealand, but we did, again, set that up back in the day. We do have the ability, and we do a little bit in New Zealand, but in no way, shape, or form is it really a focus of ours. We believe there's a lot of opportunity in Australia as well. But again, if we can leverage off those international opportunities with our partners in Australia, that's where we think we'll win, as opposed to setting up overseas and trying to put boots on the ground, etc.
Yeah, that makes a lot of sense. It's a sound strategy. I think Freelance is a great company to do it with. We're actually hosting a webinar with them tomorrow morning. So,
oh, really? Okay.
yeah.
Well, there you go. They're very strong partners of ours. Rate them highly. We've been partners with them for a long time, and we are integrated with them, and it's a beautiful product and a beautiful partnership. So,
yeah, excellent. Maybe two more questions actually. So one which has to be asked is regarding AI. So how are you using AI on your platform? And there was one which came through regarding some downsizing of headcount done recently. Was this AI related, and how much did you downsize?
sure. So AI, again, in any technology business, AI is key today. What used to take us 3 months, now we can do in a day. When we IPO'd, I think we had 20 people sitting in a Sydney office at huge headcount, huge overheads. I'm building out Butn, which again, what we can do now is make those iterations off the platform. So much so that we have reduced headcount. We have we have local IT, and we have outsourced IT. We have reduced our outsourced IT in the last month, again, reducing that headcount, reducing those overheads, again, in the lead up to that profitability and that march to cash flow positivity. So it's definitely been an enabler for us. Do we believe that AI will replace Butn in the technology way? Maybe eventually. But I think you have to look at it at a holistic point of view. Like, if we were just strictly a tech play, it'd be different. But we have the tech, we have the lending, we have the capabilities, we have the integrations. So even if you have the best AI product, you still can't integrate to a MYOB. You still can't integrate to a freelancer. So it's a three.
Partnerships.
Exactly. It's a three-pronged attack. If I was running a strictly SaaS business and a strictly sort of lending piece, I'd still question the AI model, to tell you the truth, because back in the day when we built Butn, we used to do it individually ourselves. We used to run the credit checks, we used to check the documents, we used to do do the legals every step of the way, and then we digitize that whole process. Unless you've really lived and breathed that onboarding process, there's only so much AI you can do to be able to understand in an end-to-end onboarding position and be able to make that credit decisioning. So AI is definitely helping us. Do we see it as a threat today? We don't see it as a threat today because, again, we have a three-pronged attack, not only a sole go-to-market proposition.
Excellent. Last question which has come through is on Moneybox. So a few people asking, sounds like a great opportunity. Would like to know how they can actually put their money there.
Yeah.
But outside of that, maybe just give a bit of color as to what it's looking like right now. Do you have any numbers around funds under management or anything that you can provide?
Yeah, look, we launched officially a couple of weeks ago. We've already, again, we haven't sort of smashed the lights out. Again, we're making sure everything is working as it should. We've got a couple $100,000 out. It's again, it's IRR about 14.5%. We're paying 7.35. Our claim to market is, listen, we've done over 2.5, nearly $3 billion of lending over the last couple of years. We've written off like 0.07 or whatever the number is, negligible losses over 3 billion. We know what we're doing, right? We've been leveraging other people's balance sheets for way too long. We've been running around town for the last 10 years since we started this business, raising money, wholesale money, the Northleaf money, etc. We understand the fund landscape. We understand the retail funds space as well. We understand the origination side of it. We understand the distribution side of it. People will always tell you today, you just have to Google it. Private credit. It's hot. It's not. It's hot. It's on. It's not on. But then you look at it, you take a step back and you actually look at where private credit's sitting today. Anyone out there can raise money. But once they raise the money, what are they doing with it? If they're desperate to get that money out the door and make their fees, they're going higher up the risk curve. We don't need to do that. We have a distribution. We have an origination machine that hits millions of businesses out there. So much so there's a million businesses, we can utilize those millions of businesses to get money and invest it with us. So much so we don't need to run around town trying to place it because we've got that distribution. We're already doing $400, $500, $600 million of lending. So we're really seeing it as a feeder fund. The PDS is written as a generalist fund as well. It's a targeted return of 7.35%. Again, it's a retail fund. We can't make any claims that are unsubstantiated, but we do target it. We are putting out the door a solid. We're getting that solid NIM that sort of flows back to the investment manager, which again flows back up to Butn. Really leaning into that digital first experience. So digital first from a funding side. Now we have digital first from an investment side, and then with the top 40 bank, we have digital first capital light model. So we believe those three-pronged attack is really what's going to set us aside. We've got the cash to do it. We've got the execution to do it. We've got the technology to do it. We've been in this market for 6 years now. We were the first with embedded finance B2B. We're still leading the way with embedded finance B2B. The product's done nothing but matured over the years, and now we're ready for the next phase of growth.
Excellent. Well, we'll have to call time, but I think that was really a great presentation. Your three-pronged attack
Appreciate
makes
it.
a lot of sense, and Moneybox is a natural extension of what you're doing. It's a known risk in terms of you're doing the same thing, but just finding funding the other side. So it makes a lot of sense.
Moneybox Invest, moneyboxinvest.com. That's where you can find all the information, and obviously butn.co and investors@butn.co for any questions, comments, or follow-ups.
Excellent. Thanks, Rael. Thank you for your time.
Not at all. Thank you, Wayne. Thank you, everyone, for joining today.
Cheers.